is ticking on. Let's just run through these. This is another indicator that we're going to be rolling out, and this is what we call the market strength indicator, or MSI for short, and it's a sister indicator, if you will. I'm sure many of you here, I know some of you are on the education program, or on the Forex education program as well. You'll be familiar with the currency strength indicator. It has very many similarities and parallels with that, because what it attempts to do is present a great deal of data in a very colorful and intuitive way. It's designed to give us views on potentially overbought and oversold. It's designed to give us views on the strength of trends, when the lines here you can see are rising very strongly or falling very strongly. That is telling us, without even looking at a chart, that in this time frame, which is 1, 3, and 5 minute, and I'm on the 5 minute at the moment, that instrument or stock or whatever it is has been climbing rapidly, and this one has been falling rapidly. In addition to that, it has been developed primarily also to give us views on broad market sentiment, and typically this is one very simple application of that, which is looking at the 4 indices that we were looking at earlier on. If I just pull it over to the right a little bit, we've got the YM in blue, we've got the Russell in orange, we've got the ES in purple, and this minty green one is the NQ. So you can see there that on this time frame from the last 3 hours or so, those markets have broadly been moving together. It avoids looking at multiple charts. We have it here on one workspace in multiple time frames. We don't need to go off to other charts to look at it. We've just got a broad view on sentiment, which is great. And the reason I've got this one on here, this of course is the VIX. This is the VX future. And typically what we expect to see when the indices are falling, we expect to see the VIX rising. When the indices are rising, we expect to see the VIX falling, because it's an inverse relationship. So again, it's another way of looking at relationships. It's an indicator which looks at relationships that are in agreement, which we expect to see in agreement, but it also highlights for us where that relationship, for whatever reason, has broken down. And it's what I was referring to earlier on, is where we might be looking at the Russell, this orange line. If we've got our 3 big indices, if we can call them that, and they're moving in one direction, and maybe the Russell is moving in an opposite direction, perhaps it's telling us something that we should be aware of in terms of risk per se across the market. So that's a very simple application of it. On the next one, this is looking at sectors. So again, this is great for what is going on in terms of sectors. These are much slower time frames. This is the daily, the weekly, and over here I've got the monthly. We can see on the monthly that XLU, which is utilities, that's been falling quite strongly. And a lot of them up here were very, very strongly overbought at this point, but have been selling off quite strongly. And now these have recovered. So we're seeing that's the XLK. We've got the XLY there. We've got the XLP, and we've got the XLE, which is the energy sector. You can see that was selling off quite strongly, is now starting to rise. And over on the weekly, it's been rising very strongly. And this concept of using these in multiple time frames is very much the same as we do with the currency strength indicator. We use them across multiple time frames. And what happens in our fastest time frame, which happens to be the daily in this case, if it is a very strong change in trend, then what you want to see happening over here, for example, with the XLP has been rising quite strongly on the day, that is now starting to kick up on the week, and it is rising again on the month. And that's what you're looking for the whole time. This could be a 1 minute, 2 minute, 3 minute. It happens to be a daily, weekly, monthly. The principles of using it in that way are exactly the same. This is the next one. What have we got here? This is, okay. Now this is what Anna was referring to earlier about looking at elements of the market and trying to establish from in a very visual way what is going on in terms of sentiment. And this is spread out across the 5 minute on the left. We've got the hourly in the middle, And over on the right, we've got the daily time frame. So again, a nice broad spread of time frames. We've got 5 on here. You can load 6 because if I just show you the back end, let's go up here into inputs. I've got 4 loaded here. We could put another one on, and because we're on a base one here, that gives us 6 instruments that we can load simultaneously. So we've got 5 on here at the moment. We could put another one on. What we've got here is really a very broad mix. I've got a sector here in the middle, which is technology, XLK. I've got a UVIX, which is a doubly leveraged variant, an ETF of the VIX, so it moves twice as fast. So of course, as we would expect with the VIX, this would be rising if indices are falling. This is the USO, this is the oil, that's the ETF for oil, US oil. Down at the bottom here, we've got the SPY, which is the purple line here, and then we've got the brown line here, which is TLT, which is bonds. So across this view, it gives us an instant view of sentiment from many different perspectives. We've got a view on oil, and of course, alongside this, we could also have, for example, we could have a UUP on here. We could have the dollar. Alternatively, we could have the CSI alongside, and we can see the dollar there on spot forex in the same sort of time frames. But it's this whole idea of being able to view what is going on in the context of sentiment, in the context of money flow. And it's just a great way of compressing information into a single workspace across multiple timeframes without having to look at multiple charts. I appreciate from a very straightforward way, we can obviously use it in the way we would the currency strength indicator, for example, where we would be looking at it for trading opportunities, absolutely fine. Where you're looking at the extremes, you're looking for those oversold regions at the bottom where we got down almost to 0 here, and overbought up at the top here where we got up to 96 odd. So yeah, absolutely no problem at all. It's great for that application. It's also great, as I just explained, in terms of the trend, the strength of a trend here falling sharply, this one falling sharply. If you don't like to take reversal opportunities where the risk is higher because you have to lay out more risk on the table to allow for your stop loss to be set wider, then certainly jumping on a trend is absolutely fine because it's lower risk, because the trend has already got some momentum to it, and therefore your stop loss can be that much tighter. It doesn't have to be as wide as if you're a reversal trader where you've got to apply patience. For example, up here, you've got to be patient. Now, this is on a 5-minute time frame. That was maybe I don't know, half an hour or so. You've got to be patient. All you can be assured of is that at some point that market will move. It cannot stay there overbought forever. It has to move. So it's not a question of if it's going to move. It's just a question of when. The problem is you don't know when is going to happen. So therefore, you have to allow a wide stop loss to allow for the congestion pricing that's invariably follows these regions, with the price move sideways and then rolls over. Whether that rollover is triggered by some fundamental piece of news, whether it's triggered by something else, doesn't matter. You just have to wait and be patient. So if you can be patient and wait for reversal trades, absolutely great. If patience is not a virtue that that you're not comfortable with, then, and let's face it, none of us are particularly patient because we're all here to make money. But trading congestion phases, trading overboughts, oversold, reversals is a great way to make money, and there are lots of advantages to it. But one of the big disadvantages is twofold. First of all, you have to put more risk on the table. Secondly, you've got to be patient. So I wanted to put this together, this workspace, really to show you another application of the indicator, really, which is not so much about trading. It's much more about viewing the sentiment across the market through the prism of all the different markets that we can attach, whether it's bonds, whether it's the SPY, and how that plays out in terms of our sectors. We can have the VIX and all the rest of it. So we can look at commodities, we can look at stocks, we can look at bonds, We can look at Forex, we can look at everything and just get a view on sentiment and what is going on across the market. Whatever it is we're trading, whether it's short-term or long-term, doesn't make any difference. It's absolutely the same. So speaking of the CSI, I've got the CSI on here, and this is the UUP over on the left-hand side. And just mirroring the two there. And over here, I've got copper futures, which has been on a real tear in over recent times. This is another workspace, again, really following on that theme. This is commodities now we're looking at. And this time frame is, we're on the fast time frames again, the 1, 3, and the 5. And again, you can see here we've got copper, we've got silver, we've got oil, and we've got gold down here at the bottom. Again, typically overbought and oversold. Are these commodities moving in the same direction? Are gold and silver moving in the same direction? Have we got divergence there? Normally we would expect to see the two moving together. If we haven't, and maybe we're trading them, we should know that. Equally, silver is an industrial metal, gold is a precious metal. I appreciate silver as precious metal as well, but silver is in high demand, very high demand in growing economies. It's very much like copper. It's a barometer, as Dr. Copper is it's a budgerigar in the coal mine, if you like. It really does indicate when economies are strong. We see strong demand for copper. You like to see strong demand for silver for that reason, and so on and so forth. So there's lots of ways of using the indicator and applying it to all these various markets. This is bonds. This is purely bonds. This is again is on 5, 10, and 15 fast time frames here. Pull over on the 15-minute here. I've got the 2, the 5, the 10 notes on here, and you can see how they're all pretty much in agreement. And I've also got the ES on here, because what you want to see is what is the relationship between bond markets and equity markets, because typically you would expect to see, if you think about it in terms of money flow, then the traditional relationship should be that you are likely to see money flowing out of bond markets, which can be considered lower risk, which they are, although they carry their own risk, of course, into equity markets, which are generally considered higher risk. So typically, you would expect to see bond prices moving lower, in which case yields are rising as equity markets are rising. So in other words, an inverse relationship. But of course, it's colored to a huge extent by interest rates and also by yields, which I'm not going to go into now. But though you always have to factor that in when you're looking at this relationship between bonds and equities. I think that was the last one. Very quickly, we've looked at the VRSI, but this is the VRSI on SPY. And if I pop down onto the lower one on 5 minutes, this really reinforces that aspect of the volume relative strength indicator. You can see it here. It just jumps off the screen at you. The strength of the trend, the strength of the pressure here being applied to this move, and it really only comes to an end once we get to 6 o'clock here and we start to see a change in sentiment, a small change in sentiment. But what this also tells you very, very loud and clear is that we are not seeing pressure bars of any substance, certainly not of this size. And therefore, whatever this trend does, if the pressure bars remain at these very low levels, this trend, whilst you may be comfortable trading that trend as it meanders its way higher, it's not a trend that is going to rush up. It's a trend that is going to meander off into sideways here as we come towards the end of the session, which is no great surprise. And we get a little injection here of pressure at the end. We always do at the end of any trading session. At the start of trading session is when you see the maximum volumes being pushed in at those levels, and then over the next 15-20 minutes, the market settles into its pattern of volume trading. The same is true at the end of the trading session. You'll always see an injection of volume coming in late in the day. So you get this sort of parabolic shape to volume across the piece. But I thought it really does demonstrate the indicator. And of course, this would all be confirmed with VPA. And you've got classic entry candles here, signals of weakness. I don't even need to look at a volume chart. I can just look at the price action, where you get these efforts to rally, wicks to the upper body, wick to the upper body, effort to rise. Is this a market that's strong? No, of course it's not. And you're always looking at the price candles, and particularly the wicks, whether you've got a predominance of wicks to the upper side or to the lower side, because if they're predominant to the upper side, then it's telling you the market is weak. If you've got predominant to the lower side, it's telling you that there is a potential for reversal and for buying opportunities. Then you bring in volume overlaying that, and that really completes the picture for you. So it's a two-step process, if you will, where we're constantly looking at the wicks are and the body of the candle, and we're looking at that in conjunction with the volume as well. But I wanted to show you that because it really does demonstrate the VRSI maximum as to how it works and how it reinforces and helps us. And the other thing, can I also say that in many ways, and this it goes unsaid, but it's also hugely helpful. If you're using the trend monitor and you're familiar with the trend monitor, then that was developed primarily, as the name suggests, to monitor the trend, and underneath that, to help you stay in the trend by virtue of the colors. It looks at trends over a slower time frame. It takes a more considered view. But when you get the little pullbacks, which are so emotional for you, the response to those is to, if you have profit and you're in a trend, and the market starts to pull back against you, and you start to see that profit diminishing a little bit, your reaction is, I'm getting out. That's it. I've had enough. I'll take my profit, whatever it is. I'm grateful for a profit, because normally I'm dealing with small losses. So on this occasion, I've got a little profit. So that's it. I'm out. Done. The market then continues. And that's an emotional response that we all suffer, and we have to fight the whole time, because it's a natural response. The trend monitor was developed to help you manage that response through those times of pullbacks and reversals. And in the same way, this indicator does much the same, because when you get these little pause points here and you get these little reversals, it's pretty much telling you here, yeah, okay, we've got a reduction in sentiment here, a reduction because it's changed color and the height is reducing as well. But bang, then we get this comes back in. And these heights here have not gone down to the fulcrum point. They've merely diminished a bit. So it's just telling you, be patient, wait, don't take an emotional trade and get out. Just sit tight, wait. As this starts to flatten, yes, you do see it diminishing. But even in these phases here, you are still seeing we're still well below. We roll over again, and we get a little bit of an increase here as well. And you might not be comfortable sitting through this. You may well have got out. Fine, fair enough. We can't win them all. But it does really give you that confidence, and it's another confidence builder, because this business is about confidence. If you have the confidence to stay in through these trades and maximize what you possibly can and not get taken out on emotion, it helps massively, because if you take a block of 10 trades, you can have 7 small losers. As long as those 3 at the other end are reasonably sized winners, then your trading account's going to go forward. But if you're constantly taken out of the market on emotion, and those 3 trades at the end are pretty much the same size as your losses, then you've got 7 small losses and 3 small wins, and that means your account is going to just subside slowly all the time. You're not going to move forward. That's the hardest thing to do in trading. There isn't anything harder to do, unfortunately. That is it. It's the single hardest thing to do. I'm going to stop there because I've gone way over time. I can hear Anna clacking away in the background. Are we okay up to questions? Yep, okay, all done and dusted. Very quickly, just to wrap up, apologies for going over time. This is where you will find the indicators. Those 3 that I've mentioned, the market strength indicator, the VRSI indicator, and the VWAP indicator, will be released once we roll out the stock trading program, which will be in the next few weeks. If you have the full package of indicators, and I know we've got some customers in the room who have that, you will get these automatically free of charge, because that's what we do, and I've always done ever since day one for our customers, because it's our way of saying thank you for investing with us. So if you buy the full package now, or if you want to upgrade to the full package now, you will get those in due course. And when I say upgrade, if you've bought anything from us in the past, then we will always give you a credit for that. So we have you on the system somewhere, and we just work it out, and you have a credit for it, and you just pay the difference for an upgrade. So the other reason for doing that right now is that once the stock program launches, all the full package prices will be going up, I can assure you, because of the inclusion of these three major indicators. We couldn't keep them at the same level. They've been at the same level for the last 12, 13 years, and we couldn't sustain that. So I'm afraid they will be going up in due course. So these are the four platforms at the moment, and MT45 is one license, NinjaTrader 780 is one license, and TradingView is just fantastic because you can use it on any platform. I have it running on a Mac. You can have it running, you've got iOS. You can have it on mobile. Doesn't matter. It's great. You can access it in any which way you like. So that's where you find the indicators at Quantum Trading. This is the Forex trading program on Quantum Trading Education. This is where the stock trading program will come shortly, and it'll be here, and it'll just be a two image landing page where you choose whether to join the stock program or the Forex trading program. And of course, if you're on the Forex trading program and want to upgrade to the stock trading program, we will make that happen for you as well. There will be a small upgrade cost, but it is only a small upgrade cost. And if I show you just very quickly, this is the number of PDFs that are involved. These are 23 PDFs, which are just a small part of the overall program. There are a massive number of videos. It has taken us nearly 2 years to put this program together. It's hugely comprehensive, as indeed is the Forex program. And that's the reason it's taken us so long to roll it all out. But we are getting there slowly but surely. Finally, over to Anna's site, annacoulling.com. Here you'll find all her books. They're up on Amazon in Kindle and also in paperback. I have to say, it is immensely humbling to see some of the comments up there, to see comments that flow through Twitter on a regular daily basis. It is truly humbling to see the number of traders who have discovered volume through her work and have been able to succeed, and where otherwise they have been struggling. I can't tell you how much that means to us. It really does mean an awful lot. And the same is true on Amazon, where a lot of the public comments say very similar things. So thank you very much indeed for tonight. I hope you've enjoyed it. I'm sorry we've run so much over time. We will be back next week. I think we're probably going to settle on doing these on Tuesday. Where are we? Wednesday or Thursday? Wednesday, aren't we? Doing these on a Tuesday and a Wednesday split, because doing two on one day is a little bit too much for us at the moment. So we will see you. Enjoy the rest. I was going to say enjoy the rest of today. It's pretty much done and dusted, but enjoy the rest of the week. Have a great weekend, and we will see you next weekend here, I hope. So thanks very much indeed for coming along today, and see you soon, and bye for now.